So it is not looking good for the ringgit. And to get more into this and how it's affecting the markets, let's get to Nazri Khan, the head of retail research at Affin Hwang Investment Bank. Okay, a ringgit coming down against the dollar.
Correct.
That must have some jitters in the market.
Correct. I mean, from stock market per se, obviously, I'm going to see there'll be some reactions to this. We got to understand that in our market, we have about 20 to 30% of the stock which are very sensitive
Yes.
to the fall of ringgit. But I would say that we need to know what are the sources that contribute to the ringgit decline. We know that this whole thing is because of two issues. Number one is US dollar. On average, dollar index has gone up about 30% over the last 6 months. To be fair, I think not only ringgit has come down, we also see that Indonesian rupiah, Thailand baht,
So broader
all of this
Asian
has
currencies.
the whole emerging market currencies has come down. We also got to understand that to a certain extent, the commodity meltdown that we see, especially crude oil, this also contributed to certain outflows money from Malaysia back to the US. We know that the job data in America on Friday was very strong. In fact, the strongest job data in 6 years. This could be an indication that the Federal Reserve in America is going to increase interest rate.
Yes.
And that is the whole reason why we see this whole foreign fund taking out the money from emerging market back to US. But my point here that I would like to stress here, I would say whatever things that we see right now, this could be temporary. It has happened before in 2001.
So we are buffered adequately against these types of movements.
We have one of the best reserves so far. Definitely our economic conditions different back to 2008 and 1998. Our financial system, the banking system is more solid. I would say that whatever things that we see here, this is actually a blessing for us. It might be able to ease down inflation that we see. Our inflation is the highest in 2 years, as we know.
And it's about to get higher next year.
It's bounced back to highest, I think. But whatever it thinks, my suggestion is that for all the investors outside there, to start hedging the losses of a ringgit value, maybe to rotate towards stocks that can go up when ringgit goes down.
So you're saying that of the 20-30% that are more exposed to these ringgit declines, move into other sectors then, and what would those sectors be primarily?
I would say we should go for sectors that is negatively correlated to ringgit, which means when ringgit came down, they goes up.
And what would those
in
be?
the past, that should be generally exporters, technology stocks. There are two stocks I would like to recommend here. First one
In
is
the tech space?
Tech space, exactly. MyEG, and the other one is PUC founder Berhad.
And MyEG just had an interesting day.
They had, their result has gone up by 40%, the latest quarterly results. They have huge impacts from the latest project the government has just launched, which is the Transportation Safety Project. All buses in Malaysia are expected to use MyEG software. We also expect them to get a lot of boost, especially from the bonus issue that they're going to come up next quarter. And don't forget that there's a huge increase in the foreign workers permit that's going to come up. As for PUC Berhad, the quarterly result has gone up by tenfold last quarter. They also are coming up, going big into green energy.
Right.
This is another sector that is going to get a lot of benefits from ringgit falling down as the commodity goes down.
So their supplies, their materials will be cheaper
They
than when it comes
supply
to...
big in the green energy. They're also going big into mobile platforms,
Right.
especially China, Malaysia, which allows...
It's interesting that you're saying
Yeah.
there should be a move away from oil-related stocks to those that are more
Exactly.
tech-oriented or services-oriented, when the government is saying we need to come down on how reliant we are on petroleum revenue and move into that services space.
Exactly, you're right.
Yeah.
And in fact, I would say that whatever things that we see here, we need to understand this is just a temporary situation. We see no crisis, at least at the global level. American economy is strong, Japan is strong, China is strong.
Well, I'm sure
I think
many out
eventually-
there are very pleased in
Yeah.
your optimism,
Yes.
and we'll have to get back on set for more of that. All right,
Correct.
thank you so much,
That'd be
Nazri.
great.
So
Yes.
that was Nazri Khan, Head of Retail Research at Affin Hwang Investment Bank, and now over to Han Tan with an update of what's on our radar.